Alright, we're gonna go live and we're gonna see what happens here. What's poppin', traders? Hope you guys are well today. And we hanging out. I just thought I would go live because I ain't got much else to do. Ran a few errands, came back in, gonna take a look at the market, see what's going on. You know what I mean? Let's check it out, you know what I mean? So the treasuries have been real choppy today. Kind of sell off. I traded a little earlier. I lost 3 ticks. Well, I lost 2 ticks. I lost 1, and then I made 4 ticks. So I'm flat. And stock market's up today. Let's see. The Nasdaq's up over 3% currently, with the S&P up over 2%. The euro slightly down 0.2, and this quote hasn't changed since I looked at the market probably a couple hours ago. Stocks are up here. Well, tech stocks are up here. Treasuries are slightly down and selling off. Crude oil's up and ripping up here. And real estate trusts are up as well. Up flat, I would say. Alrighty, so that's where we're at basically. So we're going to take a look at the Treasury, see what's going on here. And overall, today's been a slow session, a lot of consolidation, not much going on, to be honest. So I don't know if anything's going to happen here. Hey, what's going on, Mizialo? What's popping? What's popping? You know what I mean? Hope you're doing well. So I'm going to try and pop out the chat here so I get one of those fancy old things there. See what I can do. Got to get in the Christmas spirit, you know. I just went to go run an errand for my mom, and she's like, "Can you buy me one of those Christmas plants?" So I went and got it, you know. It's in the car now, so I can't show it to you guys, but yeah. One sec, I just got to fix this thing real quick. Chrome extension, there you go. It should be good now. Is it good? Hey, yeah, it's perfect. There you go, fixed it. Alrighty. So let's take a look at what the markets are doing here. I'm gonna flip you guys over to my charts real quick here. And we can see, I mean, just by looking at that 1-minute chart on the 2-year and 5-year treasuries, we can pretty much see that the market's dead. It's not doing a lot of volume. And there is a little bit of volume I'm seeing come in. Like, for example, in the last, couple seconds here, we've seen a decent buyer lift the offer in the 5-year treasury here at 27. So I'm keeping an eye on what's going on, basically. 27.5 to 28. This is a bit of an area here. On the 5-year, 10-year treasury, we've got about 14. 14 is a battle area, so we rallied through, tested the high volume node in the session, and now we're sold off and we're kind of still bearish here. So 15-minute time frame on the 10-year treasury is still pretty bearish, I gotta say. And I'm just gonna bring up my cursor so you can see it, hopefully. Where's the Christmas tree? Yeah, it's coming. I gotta get on that. In terms of the hat, well, that was a gift last Christmas from a friend. Whatever. And thanks though. So yeah, you can see the 2-year treasuries are always also consolidating here. And if I look at the session volume here, this is what I've been seeing for the last 2 weeks straight, is that it's always the 5 and 10s that trade the most volume, with the 2s and then the 30s following up. So I keep an eye on the 2s and 30s when I'm trading the 5s and 10s. In terms of the ultra bond, I don't look at it because when I pull up the ultra bond, it looks exactly like the 30-year most of the time. But in terms of the volume, it's like kind of a divergence. So like, for example, look at the volume there. Each of these contracts has a notional size of 100 grand worth of bonds, I guess, except for the 2-year, which I believe is 200 grand if I'm not mistaken. So clearly there's more dollar volume trading 10-year, 5-year, and 2-year, with the 30s following, and then the ultra bond down at the lowest. So that's why I don't pay attention really to what the ultra bond's doing too much. I watch crude oil though, in fact, because at times it's quite important to watch. VIX evaporated. Yes, indeed it evaporated. It indeedly did. So guys, what you want to do on days like today is just like learn how to not trade. This is a great example of a day where you just you might take one kind of bad trade, 2 bad trades, and then you just have to learn to say, you know what, I'll come back another day, because you're not going to get your money back. You're going to be gambling in a market like this. You know, if you lost 2 trades in a market that's moving around, at least you give yourself a decent chance to get your money back, you know. But in this type of shit, don't count on it, you know what I mean? Question: how to make sure you got the fastest possible orders execution? Settings wise, to be honest, that's a bit of a technical question. So in terms of order execution, you know, you're sending your orders to your broker, and you have to be more specific. Are you who's your broker and what products are you trading? Because some brokers, they route the trades themselves, and other brokers, they use external routing services. For example, my broker for futures could be Ironbeam, but I'm using CQG as my routing service, or maybe I'm using Sierra Chart routing as my routing service. So the latency involved with your execution, or the time it takes for your order to appear on the book, is going to depend on your latency to your routing service. Okay, so for example, I'll click on the order book and watch where I place my cursor. Okay, when I submit the order at, for example, this price right here, you're going to see that the bids go from 1372 to 1373. So that's my order right there. So the time between I click, add the order, and then it shows up on the book, that's how much latency there is there. Okay, okay, you said TWS. Interactive brokers, they route trades themselves, so they're I don't know the whole technicalities behind it, but they're like a self-clearing broker. So they're their own routing service basically. So what you could do is do what I just did there, is basically click on the order book, and you should see your order appear on the book. And what you can also do is record your screen when you do that, and then look at the recording afterwards, and I don't know what I'm trying to say. I'm trying to say look at the recording afterwards, and you should see the latency of the time you click to the time the order appears on the book. Okay, sorry it took me a while to explain that, but you shouldn't really be concerned with these types of things. Normally the latency is between you and wherever the exchange is. So for example, if you're trading in Chicago, I mean, if you're trading on the Chicago exchange, you have to look at what the latency is between your city and your routing service. And normally it's not a lot. So the market's not moving a lot. There's nothing going on. In fact, we've been trading at 27 here for quite some time. So let's go ahead and take a look at what the stock market's up to. And it's clearly up to nothing. So this is basically what you call the grind fest in terms of the equities market here. Crude oil as well, just been kind of slowly grinding its way down, traded into a supply zone now. Potentially could be bullish off of these 72 evens, but we'll see what happens. We are selling off a little bit here. The S&P volatility seems to have dried up almost completely there. We've traded basically into this big sort of high volume node right now. And what I can say is, in terms of a battle zone, it's a little bit hard to identify. So we had one right here, right at 308 and something on Nasdaq, and now we're actually going to test that another time. So, and then we could say also right there at 326.25. So that's kind of how we see things right here. So if the bears can manage to push back under 308 and something, you can see a bit of a liquidation stop run type of movement. If they hold it here and start testing again, we're probably going to go up to test 328, 326 another time. Above 326, long trades only mostly. That's what the 15-minute chart says. In terms of ES, it looks half asleep, so I'm not even going to bother. But basically, look, 87.5 is the battle zone. Okay. We might as well look at the Russell. Why not? And compare it to the other two. So interesting how the Russell, there's the Russell, 15-minute chart. Again, it looks similar to ES in the sense that it's one big HVN near the high of the day here. So that's what I can see basically. 264.4. One time framing its way up now. And volatility is basically through the roof. Not through the roof, I mean through the basement. That's what I meant to say. Hey, what's going on? I'm moving to Chicago to lower my latency. There you go, man. I'm from Europe. The ping to the gate is 120 milliseconds. There you go, dude. So that's your latency. Brandon G, he shorted the top 90 ES and sold HVN. Careful with those type of words, man. Careful when you say things like that. I shorted the top, I bought the low. When you shorted it, you had no idea it was going to be the top. It just happened to be the top for whatever reason. The reason I don't like when people use those words is because you end up in like what's called a confirmation bias, and you end up like creating like thoughts that are not realistic, right? You know that on average you're not going to catch the absolute bottom, you're not going to catch the absolute high of a movement, and also your job, in my opinion, the job of a scalper, the job of a short-term trader is not to catch the high and low of a move anyways. Okay, there are some scenarios where you can identify a range where the market is likely to reverse. That's a little bit different, but even in that scenario, you still don't know if it's going to be the top or the bottom. You know that it's going to be a range, that it might be a buy zone, right? So you might be willing to place a bet that it's going to stop around that area, and you might get like a 2-tick scalp out of it or whatever. But you still don't know how much the market's going to give you, okay? So careful with the words. Careful with the words you use. Because this can, you know, when you say things like that, I shorted the top, I bought the bottom, you know, and then you look at the trade and it literally looks like a perfect entry on the chart. And I've done it before as well. You know, whenever I place limit orders to buy into some whatever real estate trust or whatever, I place my limit orders in spots that I know where market makers are going to buy it to, or where there's going to be demand, basically, where there's going to be demand for the market. And in hindsight, I look at the entry and I'm like, damn, I bought the absolute low, you know. But you have to understand the bigger picture is what I'm trying to say, you know. Hindsight bias is horrible. It's really like a complex thing. Cheers, Etienne. I appreciate that. Pretty cool, bro. What's up? Is this a bull trap on all markets, or it's like every single time buy the dip enormously? What's your opinion? Christmas, Santa Claus rally or not? Emil, I have no idea, to be honest with you. I just follow whatever the market's doing. I follow the sentiment of the market. I don't have enough ways to determine if the crowd is really too bullish. But this is where it would help if you were like a broker, I guess, because as a broker you see what individuals and institutions are also doing, you know what I'm saying? So in that scenario, they have an edge because they have a greater perspective of the overall sentiment, right? What traders are doing, where traders are offside and everything. So I think that was a saying back in the floor days where they would follow the brokers, right? If you saw that the broker, you know, was doing this, you followed him and you got like an instant edge or whatever type of thing. But now it's way harder to do that. You don't know who's on the other end of that trade, so you don't know who's offside. You can only kind of get an idea based on reading the real time. But yeah, anyways. So the market's still slow. I'm not seeing a lot of activity here, guys. The equity markets look pretty much dead here. And I had the bonds on the screen there, but and I'll even let's do a little correlation scan and see what's happening. So I'll just download my watch list symbols. I shorted because of the structure and I had a tight stop just in case it kept going. That's good. I think the market was overly optimistic today. I bought nothing. I saw many gaps up into resistance. Are you skeptical as me on the optimism today? No, I'm not skeptical of anything. I just trade what I see, man. I just if it's going up, it's going up. If it's going down, it's going down. You know, like I look at like little nuances. Like I'll look at the velocity of it, how fast it's going up, how fast it's going down. Where is it trading volume? You know, how much time is it spending at a certain area? How many rotations before the market moves? Like different little nuances like this help me to determine, you know, which side I should be on. In terms of the bigger picture, I really don't know, and I couldn't really tell you. Stocks are up, that's what I can tell you. Crypto's up, treasuries are down flat, or so down, I guess, down. Treasuries are down. Real estate's up, crude's up, so everything's up almost. I don't know if, you know, I mean, you have to give yourself a bit of context, right? What screen are we on here? Okay, we're on the chart screen, okay. So like, for example, if we look at the chart for the S&Ps, right, you can say that we're into a bit of supply, but at the same time, you know, yeah, I guess you could say we're into a bit of supply. So like, for example, up here, right, these 84 halves roughly, so like, look. But at the same time, it's also a bit overdone. So for example, you have 84 halves, then you can say 1, 2, and then here, like for example, 95 halves. For me, that's a bit of a daily chart resistance, 95 halves, and it can go as well as 4,700. It may as well go to 4,700 at that point because it's five handles away from a big even number, right? So the even number in that scenario can override that just because it's like an even number, and it can act as like a magnet, or it can act as a resistance, either one. So in terms of daily chart S&Ps, that looks like a bit of resistance there, but at the end of the day, I mean, you know, place your bets, right? In terms of the Nasdaq, it's a similar sort of story, right? So you have this idea here, right? 490 and a quarter, and then on these rallies here, like rally failed, rally, and it basically couldn't hold above 436 and something. So for me, that's the resistance zone on the Nasdaq. We're not even there yet on the Nasdaq. So this is the daily chart for the Nasdaq. So what you want to do is you want to like zoom in a little to give yourself like an idea of like shorter time frame, longer time frame, etc. And whatever. I don't place trades in the stock market based on bigger time frames. Actually, well, I trade real estate trusts based on bigger time frames. What are you guys saying here? Not much. Okay, so nothing's moving, so that's fine. We're not missing anything. The fear of missing out is not knocking at our door. So that was a good one today. I'm going to explain to you a scenario afterwards, after I answer some of your questions. What's your favorite trade? Does not have to be your most profitable. I don't really know what you mean by that. I trade what's good to trade right now. You know, like some days you have to be fading it. Some days you have to be going with the momentum. You know, some days you have to anticipate a move, a breakout. Other days you have to place your order far away and wait for it to come there. You know, every day is different. You know, you have to understand how to adapt to different market conditions. I don't have a favorite trade. My favorite trade is the one that makes money. How about that? My favorite trade is the one that gives me an instant profit as soon as I'm in it. That's my favorite trade. And my least favorite trade is the one that I got filled on the order and I'm offside immediately, and I should look to cut that immediately. Have you watched the Beatles documentary? Sorry for the change of subject. I have not, man. I have not watched it. Maybe I should. The market only gives you what you take from it. Execution mindset is everything. Profits must be taken when they're given to you. That's right, dude. Take what it gives you, man. No complaints. And if it ain't giving you anything, get out. Hey, how you doing, MJ? Did you earn a lot? No, I'm flat on the day. I lost 3 ticks. I made 4 ticks. And look at this 1 minute chart. That's a disgusting movement, isn't it? It's just chopping between 2-3 ticks in the Treasuries. So, you know, 12.5 on the 10-year. 27 on the 5-year, and it feels like a deja vu because I remember seeing this earlier today. Sort of a similar idea. Yeah, 12.5. I mean, it's quite a lot of contracts, I must say. 40,000 contracts at 12.5. It's quite a lot. There's definitely some market spreading going on. There's definitely some bigger players doing business here. So you have 27 on the 5-year, and the 2-year has just been consolidating down slowly here, as well as the 30-year, which is kind of interesting the way it's been chopping, holding around this area. Now for me, 4s is a bit of support on the 30-year Treasury. So that's what I see. But overall, the movement is not conducive of a lot of good opportunities. With charting software, it's Sierra Chart. MJ, it's 2 different strategies. I'll scalp when I'm day trading, and I swing trade. I don't swing trade equity futures. I would not swing trade futures. I just wouldn't. I wouldn't be able to sleep at night. So here come the 2 years. Sorry, here come the 5 years trading 26.5. You know, I'll swing trade real estate trusts. I'll swing trade. You know, things that I know I'm willing to hold for the next 10 years. I'll swing trade that, 5 years even, or I'll swing trade stuff that I'm kind of confident in, right? So like if I have a good understanding of like the sentiment behind the trade that I'm taking, then I'll swing trade it. I don't swing trade equity futures. No chance. I want to be in and out, you know. Plus, I don't have the margin for that anyway, so fuck that. Here come the 30s trading 75 contracts. Have you used IB Book Trader level 2? Been looking at it, doesn't give much info. Also time and sales, but new to this order flow thing doesn't make much sense yet. I've used Book Trader, but in my opinion, it's not good to execute certain things. There's a lot of things that are not available in that platform that I would need as a trader. Things like moving your orders quick, moving your orders around one tick at a time. You know, a bid ask triggered stop loss instead of a regular stop loss. You know, the ability to mark levels on your DOM, the ability to see last trade quantity, the ability to see number of orders, the ability to see the last trades in the last 45 seconds and then have it refresh automatically. $25 minutes, 26 and a quarter. We're ticking down here on the Treasuries, guys. Market closes at 3 p.m. the bonds, so there's a chance we could see a little bit of volatility here. So 27 on the 5-year, and like I said, 12.5 on the 10-year. So let's see here, 11. So if 11s are offered here, I think the 10-year can flush down lower. So let's keep that idea, okay? If 26 and a quarters are offered here on the 5-year, I think it could flush down lower as well. Notice how I had a marker there previously. It's kind of interesting. No, MJ, I have not used Bookmap. I have not. And I believe that everything possible with Bookmap is also possible by doing it with Sierra Chart, and you can do a lot more with Sierra Chart anyways. I have not used Bookmap. I cannot give you my thoughts on it, sorry. I always get this question. Have you used Bookmap? I have not. Sorry. Can you quickly demonstrate how to identify and execute a trade on that bond chart you showed? I would assume you use a fairly large position to ensure the ticks pay you a decent return. No. I only trade one contract. I'm a small trader. I trade relative to my account size. And I only need one contract, to be honest. So 11 stayed bid and we're trading 11 halves. Let's see. 2 ticks? Okay. Okay, interesting. It's a bit of an interesting environment here. So 11 halves are offered here, 26 and a quarter on the 5-year. Let me take a brief look at the 2-year. We have 1.5 on the 2-year. That might give us a problem. Tens are trading 11. Again, not very conducive of good opportunities. The market's very slow. Does your Sierra tie into IB? No, it does not. I have a different broker for futures trading, cold. Hey, there's 26 people watching. Hope you guys are doing good. Guys, like the stream. Look at this. There's 25 of you and only 2 of you liked it. What is this? Y'all are lurking in the background? What's happening over here? Smash that like button right now or else I'm stopping the stream right now. If I don't see at least 10 people like it right now, I'm stopping the stream right now. That's a threat. No, it's a joke. You know what I'm saying? I'm just messing around. Oh, I saw a couple come in. All right. You guys are taking me seriously. You guys think I'm bluffing, don't you? Some of you are going to say, he's bluffing. He's not going to end the stream. Okay. Y'all liked it. I had to remind you. Thank you. I appreciate that, guys. You know what I'm saying? It's hard to be a YouTuber. You just have to tell people to like it, you know? Because you guys actually forget how important the like button is on YouTube. Treasuries are selling off here. I'm not going to chase them either. You know, you could place an offer at 11 here, but I'm not going to chase them. just know that if I was in a trade, I would be happily short. I'm not looking for long trades here at all right now. You guys are funny. We just sheep, not content producers. Yeah. What are your thoughts on the training courses offered by Jigsaw? Wasted $2,000 or no? Haha, very good question, Lawrence. Personally, I've never tried them. I've never used them. Well, have you ever used torrents before? You should try to torrent a few of those things. You might find something. Yeah, well, I would say don't bother. Don't. I'm really mixed on this shit. I don't like talking about this. I think selling trading education is a huge paradox. So what's this? Why do I have 9.5 on my chart here? That's weird. There's nothing in 9.5. Take it off of there. Or maybe there is something. Let me just double check. If there's nothing in the last 10 days at 9.5, oh, there is in fact. Okay. So the treasuries are into some kind of a demand zone here. This is a 10-year treasury. 1, 2, 3. You could say 9.5. Yeah, 9.5. I see it as well. Kind of a bigger picture, bit of a demand zone there. And there's also a big step in the profile. But this comes from 1, 2, 3, 4, maybe 4 or 5 sessions ago. So it's still relevant, I would say. This comes from the 1st of December here, we're talking. 1st of December, Globex session, was it? So there could be a demand zone down here at these 9.5s. You can extend it up and down a few ticks. So we're trading pretty much into that now. We're just traded 10s on the 10-year. You guys are funny. Thanks, Rob. Lol, wham bam, that like button. Do you use institutional ownership percentage as a trade criteria for any particular trades? No, I don't. I don't. Maybe I should, but I never looked at that before. $6.25. We're still trading 6.25 on these 5-year. $11 is offered. Now, this is what I would be able to tell you here. There's a few things in favor of the bulls here in the treasuries right now. There's a few things in favor of the bulls. Number one, 1.5 on the 2 years. This is a demand zone, and we've tested it, and it's holding currently. That's the first thing in favor of the bulls in the treasury market. The second thing in favor of the bulls, in my opinion, is that if we go back bid here at 26.25 on the 5s and about 11s on the 10s, I think it can easily sweep up back to buy stops, back up to 27 on the 5s and maybe about 12.5s and higher on the 10s. But getting that type of trade in this environment is like literally really hard to get, because by the time it goes bid, you're going to get a bunch of traders trying to scramble to get out, and they're all going to pile up on the bid, and then it's just going to trade on the offer. And the only way to get into that type of trade is if you take the offer. So you're really leaving a risk that you think it's going to go, but then you're immediately back on side. It snaps back in your face type of idea. But in this scenario, it just snapped back down a few more ticks. So this is still a bear market, I would say. But I'm just saying, if it happens to go back bid at 26.25 to 11 something on the 10s, about 11s on the 10s, then it's it has a chance to rip back up in people's faces here. Now, if we start losing 1.5 on the 2 year, it's going to be a little more bearish. We could see another quick sweep down here. So keep an eye on this bid here at 375. What do you think of Mark Douglas I think he wrote a couple really good books. I really like the Disciplined Trader. That's my favorite book from him. 2,000 contracts at 10.5, guys. We got 15 minutes left in the Treasuries. I'm gonna mute my mic while I blow my nose so I don't blow your brain. There you go, huh? All right. So 10.5. This is no longer relevant. Let's fix that. 14s. 9.5s are fine. And that 9.5, by the way, this 9.5 is a zone. It's not the absolute price 9.5. It could easily be 10s. It could easily be 8.5s, 8s. But it's within this zone right here. This is a demand zone from the last from 5 sessions ago. In terms of this 1.5, this is also a zone. It could be like within 3 ticks on that 2-year. So we've seen a bit of an iceberg at 10.5 there, a trade. About 8,000, 9,000 contracts. Overall, markets are slow. I'm not really looking for much trades. What do you think about... I got a member in my chat room. I don't know what is his execution broker service. I don't know what you mean. Is that... No, it's not IBKR. It's Sierra Chart. If I show you the execution table, could you tell me what software it's from? Yeah. Probably. I don't know how you're going to show that, but yeah. Trying to trade 11s there, not much interest. About 50 lots, 60. Okay, taking out some buy stops in the 30-year there, you saw that? And they smash it back down, 11s offered. Yeah, there's not much, there's no volume, and you can see that as well. So like one thing I always keep an eye on is like the amount of contracts going through every few seconds. So the volume's kind of spotty, especially on the 5-year. Look at that. So you got like 36 contracts, 4 contracts, nothing trading here now. And then you're just going to get a spot of volume, right? So you got 4 contracts in the last 15 seconds, and then it comes back, goes away, comes back. It's not good. It's not a good environment. You want more steady flow than that, right? So I'm just like showing you guys basically a market that is not really conducive of trading. So if you plan on scalping anything, you got to understand that a lot of days this is what you see, and this is just not good market for trading. So they had 364, the trader just hit that bid and took it out. Now it's offered over 26.5. So trader who bought 26.5 is now panicking to get out, or they're going to place their offer. And now look at that, you got more traders taking the bid. You got the trader took the bid again right there at 26.25. So this is a market dominated by institutions at this moment here. So it's getting offered over now, 26 on the 5-year bid. Do you use supply and demand zones? I do, in fact, I do. I find they're very helpful for understanding market context. Now, I don't know if I use them the way that other people use them. I don't even know if what I use is considered supply and demand zones, but it's a form of supply and demand zone, I guess. So I call it a supply and demand zone, but it is helpful for identifying market context. So, you know, these like prints that I put on my DOM here, these are areas of supply and demand, or areas of pivots that I should be watching, you know. And I have them in all markets lined up. So the 2-year, 5-year, 10 and 30, because at times you got context that in one market and the other markets could lean on the context from the other market. So like whichever markets have the best context, I pay attention to that. Like I told you, 1.5 on the 2-year is important right now. But it's not that important, I'll be honest with you, because by the time we've been trading here for just so long right now that it's more likely to flush through. I think it is more likely to flush through. It's just that timing that is nearly impossible in this market environment. You can't time when it's about to flush through. If it was moving more, then you would have a better chance. You know, and this is the type of environment where you got a big trader come in and he's going to sweep the whole bid and you won't have a chance to react to it. You know, they're going to take the bid and then they'll offer it over with another 600 contracts. You can't join the offer because you won't get filled, and then they're going to keep offering it, right? So you got traders, in order to get filled, you often have to chase it. It's a tricky sort of environment. It's very inducive of trap action. But we're coming up to the close here in the next 10 minutes of the bond market. So we'll see. We might get a little type of movement, maybe a little 1-2 tick scalp. We'll see what happens. So we've been kind of grinding our way back up at this point. So I think it's possible we get up here and trade these 27s again, which are right here, 1 tick away at this point. So good job. Things I did today: make small change and get beer, then install a few wireless keyboard. Wow. There you go, dude. You can't forget the beer, dude. La Birra Moretti. That's the best. You trade bonds now? Yes, sir, dude. Yes, sir, dude. Yes, sir. I still keep an eye on the stock market, but you know, I don't know what it is. It's just something about the bonds have got my attention, you know. There's good volatility sometimes. You just got to wait for it. And I find the risk to reward is better. It's easier to scratch trades. It's just, they're cleaner at times. NQ is a gambling market, dude. Like I would say like 7 out of 10 days NQ is the gambling market. You get one day here and there where you got some nice sort of volatility, like some very clean movements, but on average, I've noticed it's a shitty market. And that's after trading it for a long ass time. So I mean, I know how to trade it, but it's like, it's just annoying to trade. It's hard to manage. So we're still trading 1.5 bid. This bid has been here for quite some time. So is this bid right here, 1,700 contracts. You know, either it holds or it doesn't. You know, like you can't make a bet in this scenario. There's nothing to trade here, my opinion only. 26.25. And it's just chopping around 2 ticks. There's nothing going on. So I'm just gonna check you guys out, you know what I mean? So Captain's typing away here. Install Sierra Rhythmic 2 times on another computer. Practicing setups. There you go. Longer time frames win. It's gonna run through all your accounts and ruin them if you hold overnight with fears. Yeah. You know it, boy. You know it. Yeah, you gotta know the games NQ plays, you know. But it's ES too, you know. It's ES, NQ. It's the same business, in my opinion. It's they're all the same business because they're the same top end companies most of the time. You know, we'll watch them. Like, look, when the bond market closes, I'll pull up equities and we'll start looking. I might trade them. We'll see. But in this volatility, there's nothing to trade, in my opinion. So I just stream for you guys. You know, hang out for an hour and then go and see my mom and give her a flower. No problem, DJ. En français, pas de problème. Pas de problème ici. A DOM that I can tailor to my needs. I asked a trick question in Fat Cat's Discord. I was like, what is the #1 feature required from your trading platform to trade bonds effectively? What's the #1 feature you need to trade bonds? Do you guys know it? And it was basically a trick question because I already know the answer, but it's also my opinion, so yeah. But I'll let you guys type it out if you think you know the answer, and then I'll tell you what it is afterwards. Are you from Quebec? LOL. You know, it might be possible. Here's a link to the broker platform. I'll be typing essays with this silent keyboard. To be honest, I like mechanical noisy keyboards. Because, like, I don't know. Merci, merci, pas de problème, merci, yes. There's a few French traders that are on YouTube, and it's funny when they say like order book terminology, but in French, like les vendeurs, les. I just find talking about stock market stuff in French is kind of funny. I don't know why. Why not make a bot instead of doing it by yourself? This is a great question, by the way. To be honest, I'm working on automating certain parts of my process. However, there are certain things that can't be automated. And there's also certain things that, and again, it's a little bit hard to explain this, but John Grady explains it quite well if you've watched some of his webinars. But you can't play the same game as algorithmic high-frequency traders. You can't. You're not playing the same game as them because they execute round turns for like cents per side. Like, for example, you know, to get in and out of a trade in the 10-year, it costs them probably like less than $1, basically. Okay, so they're trading, you know, for that amount of commission. So basically, what they'll do is, you know, they can be in and out of a trade and scratch the trade if it's not working immediately. So they try and get into these trades that give them instant edge. And if the trade's not working, they get out immediately, right? And they do that all day long. Now, you as a retail trader, you can't play that game because your commissions are higher. So if you just sit there scratching every day, scratching all day, you know, you're just giving away commissions. So you got to pick your spots a little better, and you got to, I guess, use your discretionary human abilities to give yourself a better picture of the context. There's certain things that algorithmic things cannot pick up that a human can. If you give yourself a good picture of the overall context, and I'm you know, maybe I'm missing a trade here, but I don't think so. There's nothing going on. The market's just chopping down here. But that's my belief, is that a human trader could have an edge, not in terms of speed. That's why you do need the fastest data, fastest platform that you can react to. But you're always going to be behind in terms of speed. But there are certain things about the market context that you as a human being can understand and give yourself a better idea of over these algorithmic type of trading bots. And so that's why I believe, you know, making a bot to trade as a retail trader is not really any different than sitting there and doing it yourself, because, well, there's different, it's kind of an interesting topic. Probably I'm not, you know, super qualified to answer that, but I've heard stories of other traders who, you know, you still feel the same emotions when you're trading algorithmically. Okay, so this is moving a little bit more now, but I don't see much Rob says he likes the clicking. There you go. Brain even thinks in English. Yeah, there you go, Simon. Yeah. So there's a bit more movement here, but we're trading like 2 ticks up, 2 ticks down. Bonds close in 1 minute. I'm just curious to see how this plays out. Because a 26s, see how it keeps on back ticking 26s? I feel like it's just about to blow back up to 27 or something. Either it's going to blow right down or it's going to blow right up. It's going to do one or the other. Place your bets. Look at the 2-year losing that 150 area. 2 ticks blowing out. Huge bid at 125. You think they're going to take it? Oh, they're taking it. They're taking some. And they pull 1,000 out. Look at that. Now we trade 1,000. 125. 10.5. 10, 10.5. 10, 10.5. That's what it's doing on the 10-year. I think it's going to blow one way or another. The way it's trading here, it looks like it's getting ready to do that. And it might blow one way, then blow the other. But I think the way it's trading here looks like it's about to blow up to 27. Or maybe not. 20. And there it's closed. Now we're bid 26.25. 11s. And it did nothing. It just closed right there, guys. That's the close of the bond market. So what it did was it chopped around 3 ticks. We saw the 2-year Treasury sell off 2 ticks below our demand zone. And we basically just closed right here, 26.25 on the 5-year. Now they pulling the bids back down. Trader took the bid at 26. Yeah, screw this. How about that? George, that's a funny ass thing. No, that's not the answer, unfortunately. No, the question was, what does a trader need to? What is the number one feature that a bond trader needs from a trading platform? It's not how much money. It's not capital. How much money you need? Yes, that's what you need to trade. You need capital. Yes, obviously. No, the feature is. I can't tell you what it is. I'll tell you. I want to see more guesses in the chat. If you guys start guessing what the feature is, then I'll finally tell you the answer. But yeah, and it's just my opinion, anyways. So 3 p.m. Eastern. Fat Cat is a YouTuber. Brain thinks, what's your main electric guitar? So we're gonna start showing guitars now, eh? So I've had a number of guitars in my life. Because I'm left-handed and they've always been super weird. I'll show you a couple. So this is my first ever guitar. I don't know if you guys can see this, but this is a Dean Flying V. All right. And this was my first guitar. And I actually changed all the hardware on it. And I put in some Pantera Dimebag Darrell pickup in there. So this thing really screams when you plug it in and start playing some Pantera. The pickup, it screams. It's really a hot pickup, okay? This guitar, I would say, it plays the best out of all guitars that I own. In terms of like mobility on the neck. I also had it professionally set up by the best luthier in my city, so there's a reason why it plays that good. But yeah, this is my first guitar. I got it probably, what, 15 years ago? 16 years ago? Anyways. This is my most recent guitar that I picked up earlier this year. This is a 1989 American Fender Stratocaster, and I love it. Actually, it's pretty cool. It has a good feeling to it, a good flow, good feel. I changed the pickups to 1965 pure vintage. You'll be playing Raining Blood in a bear market, no doubt. There you go. Okay, let's put the stock market because bonds are sleepy and boring. So let's go over here and look at the sleepy, boring stock market. So yeah, this strat is just plays great. I mean, I just walked into my local store. I saw this on the wall, Lefty 89 strat, and I was like, all right, let me play it. What does it need? Blah blah blah. How much you want for it? All right, I bid, and that's it. And I picked it up, and I got it professionally set up by the luthier again, so it plays like a dream. Changed the pickups myself, which is kind of a tricky thing to do, but yeah. I lost the chat. There it is. That's what I got through a high watt. Yeah, there you go. So that's it, you know what I'm saying? I got a few others, but you know what I'm saying? We're going to be here all day if I start showing you that kind of stuff. But I think we got time. The market's kind of shitty anyways. Look at this 15-minute chart on ES. This is just disgusting. Look at this shit. Look at this. Look at this. What the hell is this? What the hell is this, huh? That's just signals just don't trade. Just don't trade, you know what I mean? Just don't trade. There's the Nasdaq, and there's the Russell, just as bad. Look at this 1-minute chart on the Russell. Isn't that beautiful? That's beautiful right there. Now, what it could signal is we're going to see a big move one way or another. You know, we're not at all, and I wouldn't bet on it. So that's screw that shit. You know, man needs another YouTube channel for guitar. Yeah, probably. You know what I'm saying? Left-handed guitars player is lucky. No one will ever play your guitar when at your house, or you'll never have to share gear when gigging. Yeah, that's true. I'm just going back and looking at some questions. Is that a VP column? What are you setting it to, and how are you using? Aaron, you asked a pretty good question. I don't know if you're still around here, but this is just the volume in the last 30-40 seconds. That's all it is. It's a volume by price indicator. 30 seconds. I can set it to 40 seconds if I want to. Doesn't matter. Just to get an idea of some accumulated volume, right? In fact, I'll go ahead and set it to 40 seconds. Why not? On all of them. So for the Nasdaq, I'll just switch that over to 40. And for the ES, I'll switch it over to 40 too. I have it set to 40 on the bonds, so yeah, I'll switch it on RTY as well. Come on, get in there. There you go. Now the thing is, they're going to. I wonder if they're gonna start resetting at random times now. So let's see when they reset. Oh yeah, okay, they reset at the same time. That's fine, as long as they reset at the same time. What indicator you use for volatility? I use a standard deviation on a range chart, and I put a moving average on top of that standard deviation to smooth it out a little bit more. Because there's times where the standard deviation itself gives you kind of like a lagging number. For example, you see a big movement in the market, and all of a sudden your standard deviation is like telling you that the market wants to move 10 points, but in reality it's just because the market just moved a lot more than it had been moving prior. So now the standard deviation is kind of overestimating the volatility. So to avoid it from overestimating or underestimating, I just plot a moving average on top of that, and that's the number I use. Pretty smart, right? Do you have any fun shorting the stock pumpers? Sure. No, I don't. I don't know. Fat neck on the strat. Can you negotiate at the store? What the Lithia did, Fred job or no? No, it's actually a really thin tapered neck on that strat. It's an 89. If you look up like I don't know, but it's a really thin. It plays really easily. Actually, it's the guitar that I've owned probably since I started playing when I was 10 years old. it's like literally the easiest guitar I have to play. So that's awesome. Now I understand why all those guys play Strats like Malmsteen or whatever. The older Strats have fatter necks. Like I have a friend who's got a 67 reissue or something like that, and I played it a little, and it's got like a bigger neck kind of. Luthier, yeah, I got the frets just fixed up a little, you know. Hey, good afternoon, Hassan. What am I using? I'm looking at the market. This platform's called Sierra Chart, but yeah. Everyone, I always get this question. What are you using? What platform you use? I have an FAQ. It's coming out tomorrow or today. You guys think I should post it today or tomorrow? No, I never use trade ideas. No, I've never played a sitar. Never. This one guy in Fat Cat's Discord, he's just shouting out all kinds of features. Okay, they're saying the last traded quantity, accumulated last size. Yeah, that's pretty good. That's pretty good. I'll tell you what it is. The number one feature that I think that every bond trader needs. I'm just kidding. I'm not going to tell you what it is. I'm not telling you what it is, guys. Okay, fine. It's a bid-ask quantity triggered stop. That's what it is. Now you guys are going to say, what's that? What's a bid-ask quantity triggered stop? I'll tell you what it is. It's when the bid quantity gets below a certain amount, it triggers a market order. That's what it is. Alrighty? That's all it is. Okay. Let's run a quick scan, alright? Let's scan for some correlations, alright? Scan, let's go. Amazon, AMAT, and that's it. Amazon and AMAT. That's all we got. And PayX. The hell is PayX? All right, let's look at PayX. PayX. Interesting, interesting, interesting. Okay. Well, I'm gonna put Amazon stock on my screen right here, because it seems to be correlating pretty well to NQ. I'm going to put also 25-cent price increments. I screwed it up. 25. There you go. Doesn't... Yes, SC does that, the feature. Of course SC does that, or else I wouldn't be using it. Why would I be using a platform that doesn't have the number one feature that I need to trade bonds? I'm not just going to sit here raving about it if my platform can't do it. Trade crypto on SC. Yeah, I think only with BitMEX. Oh my goodness. All right, I think it's time to maybe focus on, you know, losing some money, because that's all that's gonna happen here. So we're seeing a bit of consolidation here in the stock market, that's for sure. You look at that 15-minute chart on the Nasdaq, it's going straight down here. All right, we're seeing a bit of profit taking. So we were trading at 86s. Now where are we at here? Look at this shit, huh? Just flushed down 78s. Trade there for about a second or so. And it chops back up to that 80 even bid. Amazon stock's like half dead, half alive. But it's the only thing that looks like it's correlated to NQ. On the 1 minute chart, that is. The Russell started taking quite a nosedive. Yeah, look at this movement in NQ. This is just disgusting. Did you just see that? We flushed down to 78, slowly start bidding up 80, 81, 82, 83. That's bullshit. 84, 86. Okay, what I'm going to do real quick is just fix my data feed 1 second. I'm going to actually put it on standard compression because I find it works best on stock market. And I'm going to reconnect to my data. What did I scan for? I scanned for correlations. DJ, I scanned for correlations. I scanned I scanned over every symbol in the entire Nasdaq 100 and a few symbols in the S&P and a few futures contracts. I scanned for whatever has a 90% correlation to NQ. And only Amazon and one other stock came up. Not even ES hit the scanner, meaning that the market's choppy. If ES and NQ don't have a 90% or 88% correlation at least, it means the market's really choppy. But now they're correlating a little better, but it's still quite choppy. So let's say 86s, 6-point ranges. You're looking about 92s, right? Yeah, 92s, and that's where it stopped, 92. Look at how it's slowly pulling back from there too. My gosh, that's gut-wrenching. But if you caught the short, congratulations. Now it'd be 92s up to about 95s, I would say. That's like the ultimate make it or break it type of idea for the short. If you get a quick pop, or maybe it's just gonna pop straight against me here. Probably it will. Traded 93s, 92s, 93s, 90. That's just gut-wrenching, isn't it? I mean, I know whose money I'm taking. It'd be all these buyers right here. Look at these buyers. If I would get filled in on a limit sell there, I would know whose money I was taking, but now it's not very unlikely to come back there, but it could. In this environment, it could. And you guys, you're not going to see the order hit the book because my order is going on the micros for the Nasdaq. So I know sometimes you'll see, you know, if I place an order, it's not going to appear on the book like it does when I'm trading treasuries because I'm using the NQ DOM, but my order is being sent to the micro. Am I going to get blown out right now? $93. Might get at least a tick. Nope. Nope, I'm pulling that out. You saw it came like 3 ticks now. Ideally, you would want that boom right through and then back in, and then you get a couple of ticks of edge, and that's it, you know. And then you let the trade play out, but it wasn't working. But at least you know, the read was there. As you can see, we're chopping around there. So as long as you pick your spots right, you might get into a decent entry. Yeah. How much you pay for Sierra chart and data feed? To be honest, something like $50 a month, something like that. I think it's like 40 something, and then the data costs extra. So for the platform, it's like 40 something, 46 maybe, and then the data is extra, obviously. So I pay for the entire CME group, so that's like about $30, and then I also pay for stock market data. That's another $30. So add that all together, $100. So it has a real choppy market. You see now this thing's trading, eh? It's just horrible. It's just horrid. I would say it's just horrid. Horrid like porridge. If that makes any sense. Trading is 95% watching paint dry. Yeah, absolutely. Is trading always so boring? Yes, it is. George, you said, doesn't Jigsaw have this? I don't know which feature you're referring to. Local, there you go. He says he was trading interest rates, he putting the trades, and for the rest of the day he was hitting on the girls at the bank. Good for you. Heck of a coffee mug. Ah, goodness. Okay, here's a bit of a move down here. Grinding away. Well, I know that the... yeah, that's not available in Jigsaw, that specific trigger. They have the volume stop, which is when X amount of contracts trades at a price, it triggers a market order. But I've had glitches with volume stops. I gotta say, gotta be careful there. Well, I mean, if you want to start talking about glitches, I mean, you're not gonna find any in Sierra chart, that's for sure. But you're gonna find a lot in the other platform you mentioned. But let's keep that between us, please. So the market's now going down again, crashing near the lows. I would say it would be pretty much smart to keep a bear bias. Although I'm pretty nimble in this scenario. I mean, 15-minute time frame is a bear bias, that's for sure. But good luck nailing any entry. You know, you can see that in hindsight, I was looking to sell in the right spot, right? But I didn't get filled, meaning that there was other traders also selling in that area too, holding the price down. Here comes a ripper up. It's just not a lot of volume. Trying the scanner on TradingView. What are your thoughts on Dare? Thank you, Bojan. I just saw your message. Hi from Italy. You're great. I appreciate that. Happy to be of help. Do you analyze your trade stats later statistically? Yes, I look at certain things. Normally, well, on a day like today, there's not many trades. I only took, what, 3 trades in the 5-year, and that's it. That's all I've traded since the morning. So like I kind of know, you know, I had enough time to analyze, you know, any mistakes that were there or anything I could have improved on already. You know, like I've had enough time to do that already. So, and sometimes you can do it right after the trade. In fact, especially if it's a trade that you sat there waiting for about 10 minutes or more. You know, if you were stalking a specific trade, you know. That's kind of why I like the treasuries these days. Like I just feel like you can wait for higher quality trades, and like it's a little bit easier to filter out the noise, if you know what I mean. Whereas with NQ, it looks like you could trade almost any movement, which is not good. So let's say 80 here, 280, and it's flushing down. 6-point ranges, 74. Okay, we're reading it right. 6-point ranges, stopped at 74. Give it an overshoot of 3 more points down to about 71. Remember, it's a bear bias though, so be careful. I'm just giving the range. So 74 down to 71, flushes to 71. You might try it long here at 71 if you want it to be a little bit crazy, but under 71, it's all bears, and there it flushes 2 more points. Flushed under the even number, 71. You'd be a little crazy to buy it there, but you might have a chance buying it at 71 there. You might have a chance. 74 is offered. 71 on a back tick. The ES is selling. It's at the lows and it flushes. This is all bears, I think. Again, within 2 ticks. If 74s are offered, it's all bears. If it gets back above 74s, it has a chance to snap back up in their faces. But it looks like it's all bears right now. '69s, baby. NQ loves 69. That I know for sure. That I know for sure. And also, it also loves 420. It also loves weird, even psychological numbers like 239 or 79. Yes, sir. Happy. Actually, that's all I've been looking at for the last like 3 weeks. I took your advice, dude. I remember you told me, hey, dude, consider stop trading NQ and let's start looking at treasuries. And I still look at NQ, right? But like I just told you, I've been finding a little bit higher quality entries in the treasuries. But whatever, you know, to each their own. Just because I do it doesn't mean you should do it. You know, everybody has their own system. Everybody has their own thing going on. You know, do what works for you. Don't do what I do. Just don't do what I do, please. All right, 71. I said 69, but no, it's more like 70, 71. With 6-point ranges. So you could say 77s to about evens on the upper end. Would you sell evens? That's the question. Would you sell 280 evens here? Would you sell them, guys? Would you sell 280s? Would you sell 77s to 280s here? I personally, I don't think I would. I don't think I would. Look at the way we just top ticked 675 there, 7675. I don't think I would sell evens here. I do not think I would sell evens. I think I would buy sevens if it got back up there though. But even in this scenario, it would only be for a scalp, that's for sure. CR chart's the best. I agree. You could say that over and over again and I'll agree with you every single time. Would you buy stop sevens? That I wouldn't. That's a bit of a savage movement, but look at the way it's just trading here. 75s now. And it flushes another time. I see. 3 half. All right, we're going to be in the last half an hour here, so you better watch out. You better not cry, because NQ's about to take all your money. Damn right it is. 7-4. $77s. Look at that. It's like afraid to trade there. One thing I think I would bet on. I think I would bet on this, guys. How many people do we have watching the stream? 18. Okay, that's perfect. Okay. I think I would bet on this right here. If 277s are bid on a backtick, you buy it. I would bet on that. But now we're going down, so that's not valid. Now it was 3.5, 6-point ranges. So let's say 7.5s. We traded it. That's the range. Look at that. What was the low of that move? 66. Yeah, 7. So I'm reading the volatility right, guys. I'm like I normally am. I normally have very good reads in NQ in terms of the volatility, but getting those executions is like tricky. Okay, so 67s, you got down to about 4s here. So if 4s are down, you sell them. Look at the 4s. You just saw that shit, didn't you? I tell you, bro. All I had to do was press the buy button, and I would have had 3 points of instant edge right there. Now we're back up to 73s and a half. 77s, now we're trading up. 80s trading. Now this is tricky. I think now, based on what just happened, you'd be chasing at 77. Yeah, that's why I wouldn't bid it at 77 based off of that. I wouldn't bid it here at 77. You'd be chasing it. You might still get some movements, but see, look at that. You'd be chasing it. It has a good chance to flush back now. You know what I'm saying? Because after a quick move to 80, you see there at 75, it would have stopped me out here anyways. It would have got me out. 77s are offered, it'll flush back down a little. Do you trade ES? Yeah, I trade ES. I trade ES when NQ is too crazy. We're just chopping 73s. Guys, I'll be back in a second, okay? Stick around, maybe. What be poppin'? What be poppin'? Well, the real answer is nothing be poppin' because the market ain't trading much because there ain't shit happening. I normally avoid the last 30 minutes, and I'm not gonna not avoid it now. Let's take a look at what the Treasuries did here. Nothing. Still trading 26.5 on the 5-year. And still trading 10.5 on the 10-year. Look at that, 50,000 contracts, about almost 100,000 contracts, or 90,000 or something. It's pretty crazy. Yep. Nothing going on there. That's what I gotta tell you, you know what I'm saying? But tomorrow's another day, guys. Tomorrow is another day. Never forget. Oh, why do I keep doing that? Still sort of in the middle of this trading range on the NQ here, which was the middle of it was about 73, give or take. And now we're hitting that 77 one more time. And it trades it to the tick and pulls back. So I think it's still in the bears. The bears guys are still winning the game, you know. Yeah, Mohaimanoul. That's a cool name. Reading the DOM is good for entries, but is not good for trend trading. Yeah, that's why I always keep an eye on the 15-minute chart or 1-minute chart, both of them basically, and a little bit of a footprint just to keep an eye on the 1-minute. Sorry, the most recent sort of action. You know, 73s yet again on that back tick, and now we're heading up another time. You'd be basically gambling. Like if you took a back tick bid here, you'd be kind of gambling. Look at RTY, it's just flushing. So I would say like on the first sign of a pullback in RTY, there's a good chance NQ flies unless they start moving inverse to one another. But I mean, judging by how weak RTY is, about 5-point ranges, you could say threes to nines, right? Or what is it, 3.5s, 3.25? Yeah, 3.5s, or 3.25. How about that? 3.25, 9.25, or no, sorry, 8.25. It's 5-point ranges, not 6s. So look at that, 8.25 to the tick, then flush down. 3.25, 7.25. Isn't that right? No, it would be 8.25. 3s to 8s with 5-point ranges. 5-point ranges are the easiest to do the math with because it's the same number up and down. So it's 3s to 8s both ways. If you do 6-point ranges, that's more tricky because it's 3s to 9s on the up end and 3s to 7s on the down end. And then you have to account for overshoot. You know what I mean? This is my squeaky chair. We're still just chopping 73s, guys. This is like insanity. There's nothing going on here. You could say about, that's the lower end of the range right there. 575. Look at that back tick. You saw that perfect back tick? Who just saw that? I had my cursor on the price. Back tick it perfectly. It could pop up to here, 68.25. What did we see here? Traded it. Now if we're bid on this side, here, it can go up. There you go. It can go up. 68.25 to about 65.75. If this is bid, it can go up. If it's not bid, it can keep going down. And there it goes, flush with the RTY too. Not very reliable. It's still trading right there though, look at that. The RTY is going down with the NQ staying right there. Oh, 66s now, look at that. They're hitting 66s. Cool, man. I'll check his channel out. Thanks, thanks, dude. So now we're at 65s. Again, look at that 1 minute chart on RTY. It's just disgusting, guys. Disgusting. Look at this. Look at this shit, huh? Fell off a cliff. About 7.5, I would say. 60 even bid, 7.5 on the low end. Look at the RTY, the first sign of a pullback. Now let's see what the NQ does. That's the first pullback in the RTY in a long time. So now it's trading 251. Amazon's asleep, and there it follows. It gets waken up by NQ a little bit. We're starting to see a bit of a rally. So we were 65, so we just ripped up. Yeah, I just saw your question, Andres. It depends on the day. Today I only took 3 trades because there was not a lot of volatility. Other days I might take more. So let's say 65. Two and a half on the upper end. It iceberged at 2.5. Now it's coming back down. '70s offered a little bit. I think it's a sell at 70 at 2.5, like in this area. If it gets above this, it's not a sell, obviously, but it's going up. '76, so you could say 71, 9, 8.5, I would say. 8.5 max. Could easily flush right back though. Let's see. It depends on how it trades coming here. We want a quick sweep. If we don't get it, I'm out. I'll pull this out. 8.5 on the low end. It's chopping 74. Taking too much time. 74. 69, 7, 6.5 now on the low end. 6.5 on the low end. Yeah, my style of trading does apply for most of the intraday session, yeah. But it depends on the volatility. So as you can see here, we're not getting a pullback, just going straight. But this could be good trap action just to get a pullback. So if we see 74s, then 9s. Like I told you, 6.5s. I don't want to see lower than 6.5 here. But with NQ, you know, by the time it gets there, it's either going to be offside right away or it's going to be in the money right away. It's one or the other. That's NQ for you. It's a tricky beast. That's why I don't believe you need a big stop if you're scalping this market. Some traders, they run these crazy stops, 30, 40 ticks. You guys are nuts, bro. You don't need that much to know if you're right or wrong. Maybe you do, but I don't. Okay, so it pulled back and then yeah, I don't like this environment. So let's see here, 74. Fours to nines, it hit nines to about 81.5. It's kind of iceberging here a little. It's kind of having trouble. Nines. Okay, it flushes. That's good. That's good. I'll take it. I'll take it if it flushes here. I'll take it. Honestly, I'll take it. Because now in this scenario, there's a good chance that I get an edge. Let's see. Remember, 66 isn't something. That's the area. If we get it, or is it just going to go straight through me? It's inching its way towards me. I don't like that. And it traded 8.5 and didn't get filled. Remember, 6 isn't something. That's the low end. I don't want to see it trade back at 74. That's for sure. And it does. Okay, so I have to pull this out. Yeah. I pull it out, guys. That's how I work. It did a perfect 5-point rotation. Perfect 5-point rotation right there. See, I'm more conservative. I go a little bit on the overshoot, you know. If it's telling me 5, I'll go 7. I'll go 6.5, you know. Because I like to account for a bit of the overshoot there, you know. Because most of the time it overshoots, you know what I mean? So that's where, you know, that's where you have to understand that, you know, the range for a zone, it's a range. It's not a price, it's a range. So sometimes you could be a little bit outside the range, you don't get filled. Sometimes you could be a little close, you have to take a bit more heat. And that's why it is helpful if you can manage trading a few lots. That way you can give yourself, you know, you put one order at the beginning of the range, you put the other order at the end of the range, and then you kind of work with it. But now you see on the second time, it's not going to hold. I'm not going to keep my order there the second time. That's how I do business. You know, I don't leave orders there, you know, after it's traded there enough. So I think that was it. That was the opportunity. It didn't get filled. That's it, you know. Maybe it'll sell off now. Let's see. 74 9 7 6.5. Now this is where I'll get run over. I'll take a reverse trade, you know. It's either instant edge or nothing here. Instant edge or nothing. $66. I really hate this. Yeah, I won't even fuck with it. Because we got last 10 minutes here, so I'm not fucking with that. I'm not fucking with that shit. I've done it too many times, that's why I've done it too many times. The last 30 minutes get fucked over, so that's partly why I live stream, because it keeps me out of trouble. You know what I'm saying? It keeps me from taking dumb trades. It makes me more disciplined when pulling orders, you know what I mean? Remember, I had order at 69. It didn't even get there. 66 and a quarter. Interesting. Well, that tells you the market's weak. The way it's offered at 66. And remember, that's the area that I had my bid prior. Don't forget, guys. I said lowest 66 and a half, and now look at where the market's offered, 66 and a half. So that tells you that the market's weak currently. If it gets back above here and gets back above 69, because NQ loves 69 for whatever reason, it'll pop up. But now it's the last 10 minutes. There's not enough time yet. There's not enough time left in the market, so it's kaput. There's 69. It runs. It can run more buy stops here. It can run. Or maybe it'll just flush. There you go. It flushed it. But the read was there. The read was there. You know what I'm saying? So for me, as long as my reads are good, that gives me that confidence that I can execute the next time it's there, you know? But then the thing is, you have to understand is that the next time the opportunity is there, your read, the day is different, right? So your read is different. But I like seeing when my reads are good, obviously, because it gives me confidence normally, right? That's what it's supposed to do. So there's some quality reads to be had, but the action is quite tricky. Only bag holding retail will be. I don't know, man. Maybe they won't be. Maybe they will be. I don't know. I'm the boss. This guy's funny. Yeah, that's it. Okay, so let's see here. Nothing going on here, that's for sure. Treasuries are bearish on the daily chart. 10-year needs to get back above 19.5. If not, the bears are in control. Same with the 5-year. I would say, you know, the low of this bar, they need to get back above that. And the 2-year is the most bearish above of all. Just short of the 30s. We can see that the 30 is the strongest in terms of the bulls from a daily chart perspective. So I like to keep an eye on the divergences there that you see, you know, because oftentimes, like I told you, context from one market tends to lead the other markets as well. So especially when they're supposed to be correlated. So we'll see if we get any more volatility this week, guys. It's only Tuesday. So what I'm going to do now is get off the computer, go for a walk, go see my mom, give her a flower, hang out, relax, and that's it. So I wish you guys a fantastic evening and all the best. Alrighty.